Let's get a move on and focus in on numbers from Container Corp, which delivered a smart set of earnings of 184 crore rupee PAT. You had the EBITDA at about 315 crores. Not just that, the company is also set to benefit from the recent lease norms that have changed. Kalyana Rama is the Chairman Managing Director, now joining in. Thank you so much for taking time out. Let's also get a sense as to what has been your quarterly performance this time around and what has driven your numbers, because there's been a beat on many counts.
You see, basically we could see some uptick coming in exports and imports in September. And there's good domestic demand, continuous domestic demand during this quarter. That has pushed our numbers, and we did very well in the month of September. In fact, we crossed our figures of last year. They may not be separately available to the investors, but yeah, I can share this with you, all the investors, that our September numbers are very good. That actually brought us a little good numbers for this quarter. And as our operating margin, we could maintain even in this period, and we reduced our empty running cost by better utilization of assets and building up circuits, which we always do. These things helped us in getting good numbers for this quarter.
Okay, on the leased cost, why was it so much higher than anticipated? And when you're looking at renegotiations as well, how likely is it that you'll be able to bring in lower rates?
I could not get the beginning of the question. Is it about land license fee you're asking?
No, on the lease issues and the lease costs, given that they were so high this time around, share with us the reasons behind that. And when you're looking at renegotiations, if you feel you'll be able to bring down the cost going forward.
You see, land license fee even in quarter 1 is the same rate. At the same rate we taken this, and in quarter 2 also our land license fee at the same rate. Yeah, there is some representation from our side to the Minister of Railways regarding the land license fee. Till the decision is taken by the Minister of Railways, I cannot comment on that. But as of now, the land licensing fee, what is as per our calculations, as per the circulars which are available. So the railway land available with us, now today we are having around 28 terminals working on railway land. These 28 terminals, we have to pay the land license fees, that is the lease charges to railways. So these lease charges, as per the circulars, we are calculating, and that is what we are recognizing in our balance sheet. So that is same, at the same rate. In Q1, Q2, there is no difference. It is same rate what we are recognizing that figure.
Okay, sure. In June, you recorded demand for 2 terminals of about 7.8 billion. That's your top contributors. And in September, the amount suggested was at 12.8 for 13 terminals, including GST. So the 7.8 that was mentioned earlier, with or without GST, was there also any input tax credit that was available on that one?
You see, as I just mentioned to you, what we are recognizing is not 7.8. So that's it's a sort of better corporate governance. We are sharing what we are getting a demand from railways to us. But we are not recognizing that. So there is no point in discussing about the input tax credit on that. As per the circulars available with us and which are in vogue, which have to be applied to us by Indian Railways, our land licensing fee will be around 4.5 billion for the whole year in rupee terms. It is not that, but we are getting the demand notices, so we are sharing that with the exchange and with the investors that such demand notices have come. But we even now very strongly believe, the management of the company, that the total lease charges liability for the whole year will be around 4.5 billion. For all the railway land available with the Concor.
Sure. Mr. Rama, how important would be resolving the lease cost issues to the government's divestment of 30%, which is planned?
Yeah, it's very important. And in fact, it is not only for the divestment. The company, even if it is running as PSU also, it is very important to sort out these lease charge issues. So I'm very hopeful that before the end of the financial year, these lease charge issues will definitely get resolved. And of course, let me add here regarding the input tax credit, what you are asking. On this 4.5 billion on the GST, we'll get the input tax credit.
Okay. You've been very positive on the long-term business outlook. You've been expanding in your infrastructure. It's been a steady balance sheet as well. What has really aided this? How has it been over the last few months where it's been challenging due to the lockdown? And what have been some of your key investments of late?
Our investments, we are continuously doing whatever we have taken up in the last 2 years. We are going ahead with that because there is, yes, little downside during the COVID pandemic because of the lockdown and all, but again, the demand is picking up. As I mentioned in the beginning of this conversation, the demand in the domestic sector is very good, and even in the EXIM sector also, particularly on export side, we are seeing very good demand in the month of September. That's what brought the good numbers for us in the Q2. In fact, because of good exports from India and imports still not picked up, there is quite a shortage of boxes for export in India, and shipping lines are continuously repositioning their empty containers into India. So with this scenario, we are going ahead with our capex programs. Yes, there is a little halt to the capex of acquiring the rolling stock and the containers, but rolling stock also now we started again taking. This year we will be adding definitely around 10-12 rakes. And these are all new rakes. That means these rakes are DFCCI compliant. So they are of higher carrying capacity, and when the dedicated freight corridor gets operational, we can carry higher payloads on these new wagons. Already 3 rakes of that have been inducted into the company.
And has the rail market share been higher in the recent quarters, largely due to the COVID-led disruptions in road transport? And how do you see this trend continuing?
As of now, yes, it is good for the rail mode. The share has increased by 2-3%, and it's continuing. Let's hope that, but that we wanted. Now the railways are also taking a lot of good measures, and we are continuously working with the Indian Railways. So my colleagues in the railways, so to see that this share which has come back to the railway mode, to continue it even after the things become normal. So that effort is going on, like introduction of some timetable trains and trying to run them to the time. This exercise was done 2 years back. Again, recently we started this, and it is quite encouraging, and customers are welcoming this.
Thank you for joining us, Mr. Rama, and giving us your view on how business is shaping up, the quarterly numbers, as well as what the outlook is on the least cost issues.